My estimates are that the Chinese economy is going to contract in this quarter at a rate of 2% within the quarter. That's annualized -8. It's not very big. Japan contracted 6% in the fourth quarter based on a much smaller shock, the VAT shock. Let's assume heroic assumption that they grow for the rest of the year from Q2 on 8%. That is well above 6% that is before the crisis. Then if you do the numbers, that implies the Chinese growth goes from 6% to 4% this year. 4, not 5.5 as the current estimates are. Suppose, however, that from the second quarter, the V-shape implies they go back to the previous growth of 6%, not 8%. Then the Chinese growth this year is going to be 2.5%. So markets are expecting growth going from 6 to 5.5. Even a V-shaped recovery, at best you get 4 in China. At worst, you get 2.5. And then they have the global spillovers of the pandemic. So people, when they talk about V-shaped, they don't know what they're talking about.
What do you say to the people that have all this hope about stimulus coming from the Federal Reserve, the Chinese policymaker, and maybe from Europe too? What's your response to them?
The response is as follows. On the fiscal side, we're going to be behind the curve. You're not going to get much out of the US. You're not going to get much out of Germany. I'm going to Berlin next week, and the rest of Europe. Japan is going to have some stimulus. China is going to have some stimulus, but fiscal is going to be constrained by delay, politics, and so on. Secondly, on the monetary side, you have now contagion to Italy, Eurozone, and Japan. How much can the ECB do? 10 basis points, 20 basis points? How much the BOJ can do? 10 basis points, maybe 20 basis points? It's going to be peanuts. I do believe, actually, that the Fed is going to act, and I think the Fed is going to act in March, because they're going to realize now this is becoming a global pandemic. But again, how much bullets they have? 150 basis points. How much they're going to do in March? 25. They're going to do another 25 in June. How much, given a negative supply shock? This is not a negative demand shock. It's a negative supply shock, reduces growth, increases cost and inflation. Monetary policy can affect demand shocks. In the case of negative supply shocks, the impact is going to be on impact positive as soon as you know the Fed is going to act, but it's going to fizzle out over time.
Which really brings into question the faith in the Fed put that many market participants still have. Nouriel, my question to you at this point would be, looking at the situation in the economy, when we face uncertainty, the language on Wall Street goes around a couple of words. It's temporary, it's transitory. What does transitory actually mean? When people say it's transitory, what do they mean by that, and why are they wrong?
Well, sometimes shocks have been transitory. Previous, for example, epidemic have been of that sort. But, SARS was a few thousand cases, 200 people dying. This one, is the beginning of it, is 80,000 cases and 3,000 people dead. So it's not limited, it's not transitory, it's spilling globally. So it's going to be more than Q1. It's going to be certainly into Q2. I will see that they find the solution. And in this case, a shock of this magnitude has impacts that are much more than SARS. At the time of SARS, China was, 4% of global GDP. Today is 20%. At that time, there were maybe 20% of global growth, and right now they account for 2/3 of global growth. And you have global supply chains, and you have globalization, and you have challenge transmission to, say, CAPEX. Last year, CAPEX was down because of option value of weighting, risk of US-China, a risk of hard Brexit. This year is going to be risk of coronavirus becoming global pandemic. You will see a collapse of CAPEX, option value of weighting. In consumer confidence is going to go down.